All right, so let's do another trade recap on the M1 cycles that I spoke about in the last YouTube video. So this is yesterday's price action. I'm just going to mark out 8:30 open, so we've got a visual on when that happened. At the end, once again, all the times are in UTC 5 Chicago time. 3:45 a.m. is where right there, and 4:51 a.m. right, which is right there. Okay, so how can you use this portion of price to make a decision as to potential scalps, potential continuations, etc., etc.? So where is the open price of this cycle? Right there. Let me draw a box that encapsulates that range. So now how can we use this to make a decision? The easiest way to look at this for me would be this low is where orders will be paired. Okay. If that's the low where orders will be paired, how can we reach that low? See this? How is this here is coming down? Magnitude and velocity, right? Which is what we want to see sellers in control, right? Is there any follow through after that? Like, what are you doing by selling aggressively and people aren't able to push price lower? So where's the first low after those series of down candles or that expansion? Right there. All I'm trying to ascertain is, are they showing willingness to push price past that? They need to print gaps there. No gaps get printed here. No gaps get printed. Lows get swept, and where can you see buyers stepping in? All right, most people are going to say this, but this is not where buyers are stepping in for me. This is just one big gap or one big FEG. One big FEG doesn't mean anything. That's just a tiny impulse. To me, this is important here, right? Why? Because we retested certain levels and then expanded. See this? There's two consecutive ones. That is it right there. Buy that. This is a buy that actually took. Gonna have to take my word for it. Right there is something that I took. Okay. This might not look like much, right? But if you can replicate this or trade this every single day with high strike rate, 1-to-1 or 1.5, I mainly trade 1-to-1s, right? Because that's where I find majority of trading Twitter or retail trading, whatever you want to call it, fails. So they're trying to catch this low like this and covering this with the tiny stop, and it works out and runs. Why? Like, why are you demanding that much precision? You're not trying to prove anything to anyone. You're trying to do is make money. All right? Trading is hard enough already without you having to be ridiculously precise. This is something I'd take realistically, and this is what I did take realistically. My stop was actually lower than that. So we're here to give it some breathing room. This high is important because that's where the expansion started. That's where I'm looking at. So price does whatever it needs to. What do we have up top here? Clear imbalance. See how I've drawn a line at the open price? And the high is not taken. So if the high is not taken, London opens there. Sorry, not London open. New York opens. We reach lower into a cipher level, and then we reached higher. Now, how is this different? How is this different to what we saw earlier? Here, flipped. Can you see how we reached this level? Clear, buyers in control. Where's the first high after this expansion happens? Right there. Let me just move this line out of the way. Oops, right there. So if you're looking for shorts, you want to see people hopping on that expansion, failing to push price higher, which you do get here. But are sellers stepping in is the question. No, they're not stepping in. Instead, sellers get squeezed and buyers hop on the train, right? This is not a buy that I would take, but this is not a short that I would take. People who watch this multiple times are going to get some value out of this video, but I'm going to explain this further in the Discord, etc. Cool. We'll talk soon, guys.